Are we live? Are we live? I honestly don't know. We might be live. It's been 10 days, I think, since we've streamed. That's probably the longest break we've ever taken on this channel. It's good to be back. I missed you guys. I was in Vegas. I was in Vegas for BTC 25. It was quite the event. Very, very different, honestly, than previous Bitcoin conferences. Very suits. Less like the Miami days of the conference, which was more crypto bros, degens. This was very suits, very corporate treasury, very different, but good in its own way. You know, different but good in its own way. We're back. We actually had the 6th year anniversary of this channel yesterday. It's either yesterday or today. So not only is this a Chairman Powell stream, it is also our 6th year on YouTube. Hell yeah. Hell yeah. Welcome, guys. Good to be here. Good to have you here. Today we have Jerome Powell himself speaking at the Division of International Finance for their 75th anniversary conference, where I assume he will be delivering the keynote. A lot of expectations today, a lot of potential mix-ups, rumors circling of Chairman Powell and Trump's meeting last week resulting in some kind of outcome. Rumors saying that Jerome will step down today. Others hoping for an interest rate cut. We're going to find out here together. No one knows really what's about to happen except for himself, the man, Jerome. But we're going to find out. We're going to watch together. We've got about 10 minutes. If you're here today, ask, could you smash that like button, hype up the live stream, put something in the chat, say hello, you know, engage with the live, help this stream get popping for what could be the biggest nothing burger of our lives. That's where my money's at. I don't really think anything's going to happen today. I think we're going to hear some rhetoric from the man himself, likely a very similar speech to what we heard at the FOMC last month. We do have FOMC coming up this month. I believe that's the 18th. So tune in for that. It's going to be a big one. Placebo buttons, that's right. Smash up the placebo buttons. Show them who's boss. How do you guys feel about May? May's close. Pretty good. Pretty solid. We closed it at about 104, 105K. That'd be the highest ever Bitcoin close on a monthly. Sell in May and walk away, at least for now. At least at all-time high. At least you sold at a good spot, right? You sold at a good price. You sold up, not down. That's not bad. What June has in store, we'll find out together. We're not going to have the most time to do charts today because we got to tune in for Chairman Powell, but we will be live, of course, more this week. Maybe I'll go live again tomorrow. I owe you guys a few. We'll do a little bit more analysis, a little more in-depth stuff. I'm actually buying a car after this. So I would love to stay on and do a marathon stream for you guys today, but I have to go pick up a car. For those wondering, I'm buying a used Honda CR-V. My car crapped out a while ago, and I've been kind of procrastinating getting a new one. And finally, just locked in on this car. Yeah, it's just something to get from A to B. And so I'm going to do that right after this one. Finally, I know I told you guys I was going to get one a while ago. I've been carless since the last time I said I was looking at a car, which was like months ago. Been making it work. CR-V, buddy. Honda CR-V. Yeah, they're great. It's a good car. It's not fancy. It's not flashy. It's nice, though. I'm a Honda man myself, but Bitcoin conference was good. It was good. It really was different. The vibe was different. That's the takeaway. A lot of what they say at these conferences is just like repeated, regurgitated over and over and over again. You hear Saylor talk about buying Bitcoin for the 500th time, right? And it's like, all right, Saylor, yeah, I mean, we get it, buddy. We like it, but we get it. It's something new. The biggest different takeaway, the only kind of maybe new concept or new thing in this year's conference was the talk of corporate treasury. Corporate treasury was the biggest, hottest button everyone was talking about. Saylor has definitely started a movement with these companies looking to acquire Bitcoin on their balance sheets, and certainly a good thing. We're having people buy Bitcoin. That's a good thing. little disappointing that there wasn't much outside of that was new. Only old concepts. There was no kind of exciting new stuff on the horizon, just suits by our bags. And man, it was all suits. It was just all suits, all people in suits. People, and the weird part was like walking around, there was way more people. It was in Vegas, it was huge. Way more people. But I felt like I knew less people, and I feel like less people knew me, even versus Nashville. In Nashville, people were coming up to me constantly. I mean, like, Tom Crown, bro. But in Vegas, it was just like a different demographic. It was just like a different breed. I assumed that many people were also there, less for Bitcoin, more for kind of the political side. JD Vance spoke. Last year, Trump spoke. So I assume that more than zero people showed up to kind of get that scoop, or kind of, more towards the government political side of it, less maybe towards the Bitcoin maxi side. It was different. All the booths were mining. Like, it was just like mining stuff, which has really been true. But this year, it was like driven home even more. It was like not just miners, like Marathon or something. It was like kind of booths that I assumed were soliciting to other booths. Like, like really specific mining stuff, like liquid immersion cooling for, industrial, huge scale mining. And it's like, who's that for? Is it for like these other booths? I don't know. So it was different. But, guys, as Bitcoin goes forward in its inevitable path, this is probably one of the stepping stones is to kind of make this, I don't want to call it maturity, because really wearing a suit doesn't make you mature. It doesn't really change anything. But the appeal, not just changing, but evolving, keeping its old ties, but adding in new ties. When things are decentralized, you have to just accept that they're going to move in every direction. Not just the direction that you see it, the direction you want it. They're going to move in every direction, even if that's away from you. But it doesn't actually move away from you. It just grows. It's like the universe. It expands in all directions. It's not moving away from you. It's just adding on more. Adding on more. You see, Tom's not too bearish today. I'm not bearish, son. Things are looking good. Things are looking good. Honestly, these red candles, guys, it could just be like James Webb getting liquidated. This man, I don't know if he's even a real human. I don't know if he's like a single person. Long to the top, said to come liquidate him. They liquidated him. It went down. He shorted. Price went up. He got liquidated again. He longed. It went down. He got liquidated again. And then on Twitter today, begging for donations to like fight the manipulation. Bro, you are the manipulation. Like, what are you talking about? You had a 1 point whatever $billion position open. You're the manipulator. Like, what are you talking about? To me, it screams of marketing scam, or no, marketing for what? Hyperliquid, maybe. He seems to be putting out that link a lot, picking up referral commissions. That's a lucrative business. Also, shilling like low cap shitcoins, which, I mean, I don't know. I get weird vibes from the whole scenario. In this channel and in this community, we have some whales, and then we have some, whatever the next tier of whales are, the higher, the mega whales, right? And I have never met any of them that would ever behave in the way that he behaves. And I've spoken to some of you out there. Some of you guys know who you are out there I'm talking about. And yeah, you guys had a very similar opinion. You're like, there's no way this guy actually like has money. There's something weird about this. And all I can think of is marketing, because no one knew this guy. No one had ever heard of him 2 weeks ago, 3 weeks ago. By the time, like at the Bitcoin conference, his name was coming out of everyone's mouth. Everybody was talking about him. Everybody was saying, have you been watching this guy? Blah, blah, blah. Like, and attached to that was Hyperliquid. People were talking about the Hyperliquid exchange and his random shitcoin things. I'm not even going to say the name. It feels like marketing. And if you think about it, how many millions of dollars worth of marketing is that? I don't know. A lot. Did he lose all that money? I'm sure he lost money. I don't think he actually lost as much as it would appear. The trades, I believe, are real that we saw on Hyperliquid. That's very hard to fake. Is this still playing? Good. Very hard to fake. But there are many, many ways that he could have that position liquidate, but not actually or overall lose that amount of money. Whether he could even open those on Hyperliquid exchange itself, he could open opposing positions, When he's going live or long, he could open a short. When he's going short, he could open a long on Hyperliquid. And yeah, we'd see that on chain. I haven't dug into it. I bet you could find some opposing positions opened. But they don't have to be done on Hyperliquid. They could be on Binance, Bybit, FMX, BYDFI. They could be everywhere. They're starting up, but we're going to wait till the man gets on here. I missed you guys. They could be anywhere, and they could be spread across all of them. There are many, many ways that he could have remained even delta neutral, just completely neutral, not lost any money from having these positions liquidate. It's just the magician thing. It's look over here while my hand over here does something else. And that is, whether it's direct in trades, like I was saying, or through some other mechanisms, I believe that's what happened. I don't think it's like that. But hell, I'll give it to him. It was a very interesting, very strange short story on those of you reaching for the stars. Quite often ends up just getting burned up in the atmosphere, right? Losing everything. So be careful. Don't follow in his footsteps. And actually, I'm kind of glad that it's resolving this way, because I think that a lot of people saw him and said, yes, I should just throw risk management to the wind, go 40x on everything, and I'll end up successful. It's not how it works. And you can even see, even at the biggest levels, because a lot of the time people kind of assume that bigger money gets away with things. At the biggest levels, at over $1 billion position, you still come get hunted. You still get wrecked. So good lessons there. Let me see. Is she saying anything?
Today and tomorrow, we will celebrate the exceptional accomplishments of the IF division. We will celebrate the dedicated staff who have contributed to the rich.
They'll celebrate. You know what I have to say to that? That's right.
Chairman Powell, he ain't playing this a blur. Gotta follow the data, ain't no time to air. Watch him speak now with that Tom Crown.
I missed you guys. Couldn't stay away.
Navigating through the markets, knowing what to do. Federal reserves in control, making moves. Keeping that money flowing so the economy can groove. Share power, making paper every hour.
We need a pump.
Data on his side, watch him rise and devour. Yeah, he's the chairman of the board, making moves that empower.
Gotta watch the Powell somewhere else. Sound is bad on the real. What are you talking about? We didn't even have it playing. Is the microphone bad? How's the audio? Audio check? Anybody? Morgan? Yeah, I was on DCA earlier. James from Invest Answers just hits me up. He's like, do you want to do this? I was like, man, it's a busy day. I was about to go get the car. I was like, I don't know, man. And then I just moved things around. Audio good. Yeah, I don't know what he's talking about. Someone said like he had to go watch it somewhere else because it wasn't working. The walls are vibrating. I don't know. We didn't even have the audio playing. Doesn't matter. Wish him the best. Hopefully he finds what's right for him. Music is fire. Ooh, here we go. Without further ado.
Thank you, and thank you, Beth Ann. I guess I'd like to start by offering my condolences to the family and friends of former Vice Chair Stanley Fischer. Stan was a colleague of ours here at the Fed and a giant in the field of international economics. In addition to reaching the highest levels of the field in his own right, he was also a trusted and generous mentor and a teacher to a generation of the most important economic thinkers, including many heads of global central banks, advisors to presidents, and countless economists. And I know all of us who knew him will miss him. So, congratulations to the Division of International Finance, IF in these parts, on 75 years of outstanding work in service to the Federal Reserve Board and by extension to all Americans. Many current staff members are here to celebrate today, as well as a significant number of IF alumni, including past division directors Ted Truman, Karen Johnson, Nathan Sheets, and Steve 𝐂𝐴𝐺. The division has also produced many other notable alums, including, not least, Chair and Secretary Janet Yellen, Professor, author, chess grandmaster, and our keynote speaker, Ken Rogoff, and humanitarian and economist Albert Hirschman, famous for the Herfindahl-Hirschman Index, and more recently, perhaps a little less famous, as a character in Netflix series Transatlantic, to name just a few.
Old me.
We keep close track of these things. In my time at the Fed, the IF division has provided invaluable insight into global economic activity, international trade and capital flows, and developments in foreign financial markets. Division staff have also played a key role during episodes of global financial stress. And your research and analysis are critical inputs into our monetary policy decisions. Thank you to all that have served in this division over the past 75 years. Today, I'll kick off this conference by briefly reviewing why the division was created in the first place and highlighting a few of its many accomplishments over the years before turning you over to a robust set of presentations and panels. So, the IF division was created on July 1, 1950, but the idea began to germinate a few years earlier. The U.S. had emerged from World War II as a global economic superpower. The Bretton Woods Agreement placed the U.S. and the Fed in a central position in the global economy. Our mission then, as it is now, was to serve the American people. But it was clear at that moment that the Fed needed to have better knowledge of global developments to achieve our dual mandate goals. A 1948 memo proposing to create the division stated, quoting, "Problems of international economics and finance have become increasingly large, complex, and significant in recent years, and our foreign economic relations will undoubtedly continue to give rise to issues of the first magnitude." That rare economic forecast that has turned out to be spot on. 75 years later, it remains critical that the Fed understand the policies and practices of other governments and central banks and their implications for the U.S. economy and for financial markets. Exchange rate policy, of course, is now firmly in the hands of the U.S. Treasury. However, the end of the Bretton Woods era in the 1970s fundamentally changed the conduct of monetary policy, as policymakers had to understand the effects of potentially more volatile movements of the U.S. dollar on American families and businesses. Understanding global trade and capital movements has only grown in importance since 1950, as we saw during the pandemic. IF helps produce the data on international capital flows and has spent decades researching the effects of these flows and international trade on U.S. and foreign economies. Understanding this complex and interconnected web is essential for us to anticipate the path of employment and inflation. Another important development in the 1970s was the increasing use of macroeconomic modeling, which greatly influenced the division's work. Under the direction of former division director Ralph Bryant, IF developed its first multi-country model. Always on the forefront over the years, economists in the division, many of whom are in this room today, developed increasingly sophisticated models, with each new generation expanding the capability to tackle the international risks and issues of that day. These models have proven useful for understanding how international shocks transmit through the economy and financial markets, for assessing risks and uncertainties through alternative scenarios, and for better comprehending the implications of various shocks for the U.S. and the global economy. The results have informed research papers, board memos and briefings, as well as the risks and uncertainty assessment that FOMC committee participants receive in advance of every meeting. The IF division has also played an important role in responding to global economic turbulence. A prime example is the Latin American debt crisis of the 1980s. That episode required analytical thinking about the macroeconomic repercussions of the crisis as it played out around the world. Work by the division and by the IMF and other institutions led to the establishment of emergency facilities to prevent more dire financial outcomes. As global capital flows increased, other episodes of financial distress surfaced across the world, including in Mexico, Asia, and Russia. International capital flows and spillovers became and remain a recurrent feature in the division's analytical and monitoring work. The expertise generated through study and response to these global challenges proved invaluable when stress hit closer to home during the global financial crisis and then the pandemic. Both of those events required immediate, broad, and in many cases unprecedented responses to avoid disrupting the availability of credit to American households and businesses. The nation and the world looked to the Fed to lead in these moments. During the global financial crisis, when global funding markets came under stress, IF worked to establish swap line arrangements with several major central banks that helped restore stability in U.S. dollar funding markets. And of course, during the pandemic, IF division helped lead efforts to expand the provision of dollar liquidity by setting up the FEMA repo facility. These periods of acute financial stress and uncertainty prompted the division to develop new tools and analytical products that could be used to understand and respond to the events unfolding on the ground.
This is boring even
For instance,
Jerome.
the division has devised new methods to measure and assess the effects of various types of uncertainty on economic activity, including new indexes that were built to track geopolitical risk, inflation, trade policy, and economic uncertainty. As we continue to navigate the current period of heightened uncertainty, this work is critical to understanding the quantitative implications of uncertainty shocks, certainly relevant today. So I'll conclude by saying that for 75 years, 9 Fed chairs and countless board members have greatly benefited from the guidance and counsel of IF staff, and not just when responding to crisis. This team helps to assure that we're well prepared for our international engagements by providing us detailed, some might say extremely detailed materials ahead of time, and often by traveling with us. IF staff are always welcome and productive companions. In these and other endeavors, we benefit from the robust relationships that you establish and maintain with our global counterparts. So thank you to Beth Ann and to all the staff here that organized this wonderful event. And finally, thank you again to all the current and former IF staff for what you have done and continue to do to help us be a globally knowledgeable and responsive central bank so that we can deliver on our dual mandate for all Americans. Thank you very much.
Wow. Well, a lot of people. I don't know where these rumors came from, but the event has ended. Wow. And they're not even going to play the rest of it. Like they're like, and we're good. A lot of people kind of had expectations about the Trump-Powell meeting last week. And you guys likely, I hope you heard my voice echoing in your head when you read this of just, man, nothing's going to change. Nothing's going to change there. Him stepping down today, I think, was honestly like a silly belief. I'm not really sure why, like where that really could even be fueled from. An interest rate cut, also almost 0% chance of that happening today. This isn't an FOMC. That happens at the FOMC's, the Federal Open Market Committee. That is on June 18th. So you better tune in then. That's going to be in 3 weeks. 3 weeks. Better tune in then for that. Likely more exciting information at the next FOMC versus this. Usually, though, well, I don't know where this is going to go. Usually, he comments a little bit more on just at least like the state of the world, at least the state of economics. That was boring even for Powell. Even for Powell, that was boring. But you know what, man? We follow him all the time. Sometimes it's spicy. Sometimes it's nothing. But us just being here makes it fun. Makes it a good time. I missed you all. It's been a while since I streamed. Who here caught me on DCA today? That was a good time. The Delulus. Yeah, the Delulus. The Delulus. Good or bad? Nothing. This is nothing. What's up, Brad Fisher? How you doing? Is that the real Brad Fisher? The real Brad? Can't tell. Who owns the Federal Reserve Bank? Well, the Federal Reserve Bank, isn't it made up of many privately owned banks? So who owns it? I think the answer is lots of people. Many people, not just one. What happened? We're all stepping down. It would have been interesting at the very end if he was just like, and I'm stepping down. Just mic drop. Guys, the man won't even step down rates. Arguably, we don't know if he can even step down stairs at this point. He's getting older. He is not about to step down from his position. Powell is not going anywhere willingly until the end of his term, period. Likely we'll hear more rumors as time goes on about, I don't know, kind of similar concepts of him leaving or whatever. Not going to happen. Just not going to happen. And as much as we kind of root for the Fed in a weird backwards way, we root for the Fed to print, to pump our bags, to moon Bitcoin. As much as we kind of root for them in a reverse way, the Fed has steered the ship pretty well, at least since, I'll say, COVID. They've steered our ship pretty well. Things could have gotten a lot worse, a lot quicker. If the Fed just stopped doing what they do tomorrow, I don't think anyone would really be happy with the outcome. I think that would be even more chaos than we experience on a day-to-day basis in markets. Could be just not a fun time. That's what I would say. I definitely wanted to just go live here, say hello. I missed you. Nothing that interesting is going on. We opened up with, we had a very strong May close. We had a strong May close. Last week's close, actually kind of weak, a little top-ish here, at least local top-ish. Here's the way I'm looking at the chart right now. 102.4, 102.6. Decent support there. That's where I'd like to see hold. You can see on this chart, losing that level, we have some pretty inefficient price action, really all the way down to our lows of April. I don't think we're going to these lows. However, at least a local top here could be very likely. I'd be finding or watching for support, watching for a bounce for some confirmation around 102. And of course, the 93.3, the yearly open, our biggest pivot. Honestly, almost everything kind of points to 93.3. If this comes, I will definitely be opening some fat positions. Absolutely. Those are where I'd be looking for support. Let me see, how's that death cross? How's that going? 200-day actually creeping up above 93.3. It was right there before. We kind of avoided that move down, though. Those are the two macro levels. You still have 98, which is untested. Of course, could be some kind of bounce there. But honestly, I feel like if we got a bounce here, it would likely result like that. I don't know. Support below us for sure. Maybe the first week or two of this month could be unexciting, could be sideways, could be down a little bit more. But I do not believe that the bull run is over. I believe that it is realistic or even probable that we see further all-time highs this month, maybe towards the end of the month. Yeah, I know. It's not what anyone wants to hear. Bull run's not over. We still got time. I don't think this is the top. You're going to hear a lot of FUD about double top. I'm glad to hear it. You got to get that out of the way. Hear a lot of FUD about double top. You're also going to hear a lot of FUD about how this is this. I don't know about that. What do you think? Timing's creepy. April. I don't know. I don't think so. I think we have at least, another strong quarter, whether that be Q3 or Q4. I think we have another strong quarter after the strong quarter. 2 strong quarters in the year of the end of the bull run. I think 2026 will usher into the downside that the bears are looking for. I don't think it's there yet. But hey, we're going to find out together one step at a time. Put a 1 in the chat if you'd like this stream. Run up a lot faster before. Yeah, this is the slowest run up in a bull market. This is the slowest, grindiest, weirdest run that I've ever seen in my experience. We have talked about the possibility that maybe we're seeing something that we've seen on a different asset. Bitcoin got its ETF, which we seem to have forgotten already. I mean, at least I feel like I've forgotten. Last year, gold got its ETF, and sounds wrong, but it's true, in 2004. Look what happened to price in 2004. After 2004, gold went on to basically move up and to the right for 7-10 years, something grindy up and to the right, maybe. And this is definitely grasping at straws. And we're going to assess the situation, assess the price movements. If we diverge from the 4-year cycle, which at this point, I don't know why we would be looking for that, other than kind of, I don't know, because we're bored and we want some narrative. We want something to kind of explain away our boredness or make us feel better, put it into context. But if the 4-year cycle is done, this is maybe what we're looking at. Maybe we're going to see an ETF gold style Bitcoin where basically we're marked by less of a bull run, less of the explosive growth, and more of the slow, sustained up to the right pullbacks, long periods of boring, into periods of like a little bit of explosive growth back. You can see this is very, very grindy. Maybe we're going to see something like this. grasping at straws here, but definitely could be on the table. Real quick thoughts here. We talk about M2 a good amount. The Fed updated its M2 for April. What is up, my friend Alex O, my buddy? I got to meet you in Vegas. That was a treat. We didn't get a picture. That was really dumb. We could have tweeted it, tagged it. Good to see you, Alex. M2 was updated. This is lagging. That's why I always kind of criticize people who are trying to overlay M2 with Bitcoin for like current price action. Guys, we only have April's data point for US M2, probably or arguably the most important M2. World Reserve M2. It is now June, so we don't have May. We don't have, we only have April 1st data point. We don't have into April. We don't have all of May. This is lagging, so be careful with this. But what we can see is that this was updated, I think, a day ago. We are at another all-time high. March broke it officially. April putting in higher highs. And really using just the analysis we use on everything. Take that fib tool. Connect your high to your low. Real sloppy here. Look for that 1618. 22.4 trillion. I would be surprised to see M2 even slow down before it hits 22.4 trillion. I think that's what we'll see in the next data points leading into the end of the year. And as there is more money in the world, as there's more money chasing goods, we see inflation, unfortunately. But we see assets, or the value of assets, increase. We see stocks, commodities, everything typically get bought up because there's just more money to do so. This is bullish. No matter how you look at it, it is bullish. It does not look like it's going to slow down anytime soon. And so the rest of the year, I think, is going to hold some very spicy times for us. That's my honest take. Dominance. Remember looking at this? I'm just trying to do my wrap-up thoughts here. I got to go buy this car. And before any of you tuning in are like, this guy's bragging about buying a car, a used Honda CR-V. I'm frugal, man. I'm not whoever you think I am. I don't know. We're talking about just a repeat, basically, of what we saw in November with this move down. That's looking pretty similar here. Zoom it in. We're seeing a sell-off. We got that sell-off. Lower high into a higher low. Let's say lower high. Maybe we haven't gotten to the higher low yet. Maybe we have. But I don't think dominance is done. I do not think altcoin season is upon us quite yet. I think we have a little bit higher to go. So while I do believe that alts have likely bottomed in their USD pairs back in April, for now, maybe for this cycle until things get bearish. While things are bullish until things get bearish. I think they bottom for now. They are probably not done bleeding against Bitcoin. And so you got to make the call yourselves. What makes sense? Calculate what kind of risk you want to take on. I like to do that by the amount of money I put into things. You can control risk by controlling the amount you invest. If you put in 1% of your portfolio, you can only lose 1% in any given asset or something. But likely alts will see some good times. I just don't know. Your guess is as good as mine as to when that happens. I think we see somewhere in this red box of dominance, and maybe similar to 2021, blow off top. We enter some kind of alt mania phase, maybe retail returns, and that likely will usher in the end of the bull run. I don't think we've seen any of these signs yet. I don't think the stars are aligned yet. I think we still have time. Man, I hate to make it so short. I want to spend all this time with you, but I have to make it there before the dealership closes and pick this up. I appreciate all of you tuned in, saw me on DCA. That was fun today on Invest Answers channel. Hopefully they'll invite me back. I don't know. Let me know how you think I did. Keep your eyes peeled. Make sure you're subscribed here. Notifications on. Join our Discord, discord.gg/TomCrown. Keep your eyes peeled for maybe a little stream tomorrow. We'll get into more analysis, more trading. I'd love to get into it right now, but I only have so many hours today. A lot going on. I love you guys. Wencher Powell, he already spoke. It was more of a nothing burger than maybe you've ever eaten in your life. It was nothing burger. We'll keep following FOMCs on the 18th. I will catch you all very, very soon. It's good to